The airline industry is going through a rough time due to the pandemic, and just when we thought the end was in sight, the Delta variant showed up. The board is changing and we need a new way to play. I'm going to show you my moves. The pandemic created a number of problems for the aviation industry, with many companies struggling to maintain their altitude without their main income stream. Of course, their stocks took a nosedive, but this was a rare opportunity for investors to take a recovery play into the big industry. But this hasn't come without its risks, because even though over the year we've seen some gradual improvements in those companies, there is still some turbulence in the stock prices, and unfortunately some companies may never recover. After a year with planes sitting on runways, staff being laid off, customers staying at home, the industry saw some light at the end of the tunnel this year with the vaccine rollout. However, the Delta variant tells us that we're still flying for the eye of the storm. Biden's goal for 70% of Americans to be vaccinated by July the 4th wasn't met, and a recent poll suggests that 86% of Democrats have received at least one vaccine dosage, whereas 45% of Republicans have done the same, and 58% of Republicans have said they wouldn't take it at all. This seems to be driven by the Republican Party spreading falsehoods and conspiracy theories as political moves, to the detriment of American lives, and I think it's incredible to hear that this is still happening.
We gotta work on that stuff because those people have lost their minds. Right?
So some of it does make sense. But this is Jason Does Investing, not Jason Does Politics. But I will say that the way the Republican Party is behaving is causing severe problems with how the USA are recovering from the pandemic. And unfortunately that does have an effect on the stock market, especially with the aviation industry. Now first, if we look at some charts for some of the biggest aviation companies, we can see that some were able to gain some altitude before coming back down recently. Now, what's been going on in the background, as we know, is a lot of these companies have been taking on huge levels of debt, and with the recovery appearing to be further flight time away, a lot of investors are losing faith in the industry and whether the companies could ever return to profitability. However, some airlines have found a way to evolve, cut their excesses, and come out stronger. Now, I've gone through the fundamentals of several companies and I've narrowed it down to the ones that fit within the metrics I look for in my stocks. Now, the company that I'm interested in is SouthWest Airlines, ticker symbol LUV. Now, at a glance at the fundamentals, you might just assume that they take on just as much debt as everyone else, so they should just go in the same bin. Well, I'm going to tell you a different story, and this is based on the practical changes the company has been making over the last year, and why I think they could be a good investment. SouthWest Airlines were established in 1967 by Herb Keller. The company originally only operated within Texas due to legislation at the time. Kelleher founded the company's business model on a simple formula: efficiency, product simplicity, flight frequency, low fares, and fun. To run efficiently, SouthWest used a single aircraft model, the Boeing 737, reducing the costs of training, parts, and servicing. They aimed to keep planes in the sky whenever possible where they could make money, going so far as to have staff clean the plane before landing. The company cut their turnaround time to just 10 minutes, unloading people from the rear and new passengers entering from the front, increasing flight frequency. SouthWest doesn't charge for checked luggage and doesn't assign seats, all to move passengers along as fast and efficiently as possible. Flight attendants would keep the flight simple by serving snacks instead of main meals, and fun by telling jokes, and Kelleher would even join flights to do Elvis impressions. In 1978, thanks to deregulation of the airline industry, they were able to branch outside of Texas and grow their business model. They weren't the only ones though, but during 1978 to the 2000s, 8 major US carriers and many smaller ones collapsed under the strain of costs versus competition. Many airlines have merged to create 4 major airline companies in the USA,
where SouthWest have grown to hold an impressive 17% of the US market. They have been profitable since 1973 with record cash flows, whilst other carriers have struggled. There's even the SouthWest effect when the company have started a route to a new destination and caused competition between airlines to heat up, with tickets dropping on average around 25%. Their company brand continues with the promotion of cheap flights, and their sense of fun carries on with their commercials.
But all this was leading up to the pandemic, so it's worth seeing what the company has done since then to survive and whether or not they still hold the same position today. Now I want to start with looking at the CEO, Gary Kelly. He's been with the company for 17 years and he announced last year that he would be cutting his salary down to zero right to the end of 2021, along with other executives who cut their pay by 20% and all leadership positions by 10% so that they could avoid furloughs and pay cuts to their staff. The company was able to offset their salaries, wages and benefits through the US government's payroll support program, which allowed them to avoid layoffs and even make a net income of $116 million or $19 per share on the last quarter. I find this impressive because it says a lot about the company and their leadership, a level of integrity towards their employees to help them out during difficult times. It's certainly a contrast to what I've seen with other companies. Take Cineworld for example, one of the biggest cinema chains in the world. Now in the UK, they asked their employees to purchase leftover pick and mix stock before telling them that they would be losing their jobs. After the company laid off their staff at short notice, they were able to obtain additional funding to boost the company, after which they rewarded the company bosses with a £208 million bonus. I think this is disgusting and really shows that some companies have their priorities in a different direction. And it doesn't surprise me that SouthWest have actually received various awards for how well they run their company. Now I hope that's put you in a good mood, because now we've covered the company, it's time for the financials. Okay, so if we start with the first quarter this year, we can see that revenue year on year was down by 51.5% to $2.1 billion due to the pandemic, making a loss for quarter one as $1 billion. However, it is also worth noting that their year on year operating expenses were down by 57.3% to $1.9 billion due to lack of operation. Fuel costs are expected to be slightly higher this year and onwards, but they have fuel contracts to the value of $44 million for 2021 and $267 million for 2022. They also have $14.3 billion in cash and short-term investments. They accepted $1.7 billion in government aid for their staff and are expecting another $259 million, bringing the total to $2 billion, plus another $1.9 billion to assist with payroll. They expect costs to rise year on year by 10 to 15% relating to returning aircraft and employees to service. They believe there is huge pent-up demand and staffing is tight, so they have announced a minimum pay increase to $15 an hour in order to retain and attain staff for the near future. Overall, they have taken the pandemic as a push to trim the fat, reduce their operating expenses and use support from the government to cover payroll. The result is a net income of $116 million or 19 cents per share. That's not bad given the circumstances, and whilst other companies may have hunkered down, Gary Kelly has shown true vision. In addition to the plane orders, the company has opened up 17 new vacation destinations to cover the summer period into November, where they feel holiday destinations are recovering faster than businesses. Having covered the strategy of the company and their strengths and their weaknesses, it is time to discuss the figures as to why SouthWest made the best choice. Using data I've gathered from online sources and earnings reports, I filtered it down to the airlines that meet the most positive metrics based on earnings, price to earnings, price to book value, price to sales, total cash, total debt, EBITDA, enterprise value to EBITDA. Then I've been able to narrow it down to these companies. As you can see from the charts, these companies all took a hit when the market crashed.
but aside from United Airlines, they all seem to have returned to pre-pandemic levels.
But I think this is due to optimism in the airline industry, not on each company's fundamentals. So I'm going to go through those.
I've dived further into each company to analyse their attributes in terms of total revenue, cost of revenue, gross profit, net income, normalised EBITDA, total cash, total assets, long-term debt, total liabilities, and total shareholders' equity. United Airlines lead the way in terms of revenue. However, SouthWest take the lead in net income with their $116 million profit. This is further enhanced when you consider the normalised EBITDA, which reflects $573 million. Long-term debt and liabilities are up, which I think are reflections on the company's reinvestment strategy, and it is specifically noticeable if we look at the total assets and shareholders' equity. Then, if we compare the debt to equity ratio, SouthWest isn't that far off from the others, so the reinvestment amount hasn't taken a premium compared to where the others are at. So we can use this data to form some metrics. Unfortunately, there isn't much info online about price to earning ratios, likely due to how volatile the industry is right now. However, if we assume the last quarter is a reflection of each company's current health, we can calculate the PE ratio. Multiplying the quarter figures, we can multiply the values to create annual estimates. So let's start with the EPS, which has SouthWest in line for 78-cent earnings in the next quarter, whereas the rest remain in negative values. The PE ratio stands at 66, which is much higher than I would normally show interest in, but it's the only positive figure out of the group. Considering the recovery in aviation industry and a predicted growth of 70%, and the practical internal growth the company has made, I expect the PE to drop significantly over 2021. But note, this is based on one quarter, so a more appropriate metric given the circumstances would be to measure enterprise value over EBITDA. This accounts for the total value of the company, including all assets, cash and debt, measuring it against earnings. This gives a view of the general value of the company and its health. I have this value at 12.91, well below the market average of 14.5, so this tells me the company is actually in good standing.
So again, just remember these values are based on just the last quarter, so there are limitations to how they can be applied, but it does show the company is genuinely in better health than the rest. Based on the EV over EBITDA value, I think it's at least 12% undervalued in its current state. When I select my investments, I don't just look at the figures, I also look for leadership and strategy. And what I see in SouthWest is a good strategy and loyalty towards their staff, which is going to pay off in the long run. This year could be a defining moment for the airline industry, particularly in regard to how many companies are on serious levels of debt and very few will recover. Up until recently, I've been holding stock in Boeing and Rolls-Royce, thinking there'd be a great recovery play, that I'll make a nice return when the aviation industry finally recovers. The reality is that the level of debt they've been gaining every single month, every quarter, is just too much of a concern for me, to the point where I don't think they'll be profitable anytime soon, even with the orders that they're receiving from various airline manufacturers. I've been looking for an alternative way to invest in the airline industry because I do think there is a recovery to play, but it's about finding the right company. And I think that's with SouthWest.
The stock was on a healthy climb before the pandemic struck, reflecting its long history of good strategy and management. However, the stock seemed to be diving off a cliff last February when the pandemic hit full speed. Over the last year, it seemed to be doing a golden eye, peaking at around $61 in April, but it's been losing altitude ever since. As mentioned, I think this is a fall in optimism due to the Delta variant and toxic fake news being spread about vaccines, demeaning the hope for recovery.
But I still think a recovery is possible and it will happen, and SouthWest seems to me to have the best fundamentals for me to look at investing. At around $50, I think the stock is sitting on the tarmac, waiting for a refuel and ready to take flight, and I don't want to be left at the gate. I'm so confident in my research and what I'm saying that I've actually already sold my positions in IAG, Boeing and Rolls-Royce, and I've taken a position in SouthWest. That's not to say there aren't risks. The stock market is still volatile due to investors losing faith in recovery stocks, and the inflation issue at the moment is also putting people off. However, I think if the industry is going to recover, SouthWest have a first-class position. Quarter 2 earnings are due on the 22nd of July, and I'm not expecting any miracles, but I do think there might be an improvement on quarter 1, and I will be following up this video with a new one to reflect on that, so please consider subscribing so you don't miss out. That's everything I have, so I hope you enjoyed it. If so, please smash that like button, and if there's any suggestions about another company you want me to look at, or any queries or any comments on this video, please comment below or let me know. Until next time.